Welcome to the deep dive.
Hey there.
This is where we take that pile of info you shared, could be articles, notes, whatever, and we really dig in.
Yeah, we try to pull out the most important stuff, the surprising bits, maybe things you missed.
Exactly. Just to help you get up to speed fast on a topic. And today we're jumping into the world of crypto and Bitcoin.
Right. We've got this digest here, basically a summary of a week's worth of news from late May 2025.
And our mission, pretty simple. Unpack what's in this digest. Company news, market stuff, regulation, some interesting quotes.
Also, so you can quickly get a handle on what went down that week.
And honestly, this digest, it's packed. We've got a big company buying Bitcoin, a massive crypto loss for one trader.
Yeah, that was wild.
Some kind of strange news involving police and regulatory updates, too. Lots to cover.
Okay, sounds good. Where should we start? Maybe with the big players.
Yeah.
Companies, key figures.
Yeah, let's do that. First one that caught my eye in the digest, GameStop. You know, the video game retailer?
GameStop. Okay, what about them?
They officially confirmed their first Bitcoin purchase. It's in the digest.
Ah, right. I remember seeing that. They announced it, on May 28th on X.
That's the one. And the amount, it was 4,710 Bitcoin.
4,710 BTC. Yeah. And the value at the time was, let me check the notes, around $513 million.
$500 million. Wow. That's not pocket change for GameStop.
No, definitely a serious move.
Did the announcement or their SEC filing say when they bought it or the price?
Actually, no. The digest points out that neither the X post nor the Form 8K filing gave those specifics, just the amount.
Interesting.
But it does mention this was kind of expected, right? That they talked about plans for something like this back in March.
Okay. So it wasn't totally out of the blue. It followed a strategy.
Seems like it.
So the takeaway here is, it's not just tech companies anymore. We're seeing more traditional retailers putting Bitcoin on their balance sheet. Big signal.
Definitely. Shows broader adoption happening. Okay, so shifting gears a bit. The digest also mentions Elon Musk.
Right. Not buying Bitcoin this time, though. Something about him leaving a government role.
Exactly. He confirmed he was quitting that job as the White House's cost-cutting czar, part of the Department of Government Efficiency.
Ah, yes, the DOE department. The acronym got a lot of attention.
It did, yeah.
So why did he leave, did the digest say?
Well, according to the reports mentioned, he called it an uphill battle. Basically, he told the Washington Post that the whole federal bureaucracy thing was, much worse than he thought. Hard to get things done.
Sounds like he ran into some red tape. Typical Washington, maybe.
Could be. The digest also notes, though, that there was a legal time limit on his role anyway.
Oh.
Yeah, as a special government employee, he could only serve for a maximum of 130 days. And that was ending May 30th anyway.
Okay, so his time was pretty much up regardless.
Seems like it. He confirmed he was leaving on the 29th, thanked President Trump on X, and the White House confirmed his offboarding was starting.
Got it. So a mix of frustration and just term limits. Interesting context, especially when you put it next to other government crypto news in the digest.
Like what?
Like the comments from U.S. Vice President J.D. Vance. The digest highlighted his keynote at the Bitcoin 2025 conference.
Ah, right. In Vegas. What was his main point?
He was really emphasizing the strategic importance of the U.S. leading in crypto geopolitics, basically.
Why the focus on geopolitics?
His argument, based on the digest, was that staying ahead in digital finance is crucial for America's global position. And he had a specific message for the Bitcoin community.
Oh, yeah. What was that? He basically urged them to get more involved politically. Said, what happens in D.C. will affect Bitcoin, even if it's revolutionary tech. He wanted them to build on the momentum from 2024.
So a VP saying Bitcoin matters on the world stage and telling the community to lobby up, essentially.
Pretty much. Carry that momentum into 2026 and beyond.
That's a strong statement. Shows how the relationship between crypto and government is, evolving. You've got Musk hitting bureaucracy, Vance calling for engagement.
Yeah, different sides of the same coin, maybe. The tech bumping up against the system.
Okay, so we've got GameStop, Musk, Vance. Let's move from these, entity interactions to the market itself, because the digest had one story, numbers-wise, that just...
Wow.
Oh, boy. Yeah, things can get wild in the markets. This was a big one, a huge liquidation on Hyperliquid.
That's the platform for high-leverage trading, right?
Exactly. And this trader, James Wynn, that might be a pseudonym, but that's the name associated with the account, lost nearly $100 million.
$100 million? How?
Leveraged Bitcoin longs, basically big bets that Bitcoin would go up using borrowed money.
And Bitcoin didn't go up.
It dipped below $105,000, and boom, that triggered the liquidations. The digest cites on-chain data showing his positions, worth $99.3 million total, got liquidated on May 30th.
$99.3 million. Can you break that down?
Uh-huh.
It's hard to even picture that much money just vanishing. Well, the digest references this analytics platform, Hyperscan. It showed two main events on the 30th. First, 527 Bitcoin, worth $55.3 million, liquidated at $104,950.
Okay.
Then another 421 Bitcoin, worth $43.9 million, liquidated slightly lower at $104,150.
That's pretty much the whole $99 million right there, just on one day.
Almost. The digest also mentioned a smaller one, about $10 million worth, happened the day before, May 29th, at a slightly higher price.
So yeah, just under $100 million gone in like 48 hours.
Yep, wiped out. Because the price moved against his highly leveraged bets.
Man, it's a brutal reminder of the risks, isn't it? Leverage cuts both ways, hard.
Absolutely. Especially on those kinds of platforms. The volatility can just crush you if you're overextended.
Okay, so that's the scary side of price action. But the digest also had something more optimistic, a price prediction.
Yeah, switching gears completely. There was this analysis from an account called Stock Money Lizards. They put out a $200,000 Bitcoin target for 2025.
$200? Wow. What was their reasoning, according to the digest?
They were looking at what they called an obvious breakout signal, using a tool called the Optimized Trend Tracker, the OTT.
OTT? What's that?
It's some kind of technical indicator, mixes moving averages, volatility, basically tries to spot trend changes.
And this OTT thing was flashing green.
According to them, yeah. They said it showed Bitcoin was ready for its next blow-off top, basically repeating patterns from 2016 and 2020, the next major leg up.
Huh. They sounded pretty confident.
Yeah, the digest quoted them saying the pattern was so obvious it hurts.
Okay, so the takeaway is, while you have these massive liquidations showing the risks, some analysts are looking at charts and seeing signs of a huge potential rally ahead. Different perspectives.
Exactly. Shows the range of views out there.
Yeah.
And just for context, the digest gave a quick market snapshot for the end of that week.
Oh, yeah. Where were things sitting?
Let's see. Bitcoin was around $104,105.
Right.
Ether, about $2,525. XRP, roughly $2.13.
And the total market cap?
Around $3.25 trillion.
Okay. Any big movers among the altcoins that week?
Yeah.
Top 100.
Yeah, the digest noted the top gainers were CRO, HYPE, that's Hyperliquid's token, interestingly, and AAVE. Gains were pretty modest, though, under 10%.
And losers?
Top losers were ENA, WIF, Dog with Hat, and something called SPX 6900. They were down like 14% to over 17%.
So a mixed bag in the alts, even with the big Bitcoin liquidation news.
Yeah, lots happening under the surface.
All right. Let's pivot again. Beyond just the market prices, the digest had quite a bit on regulation, legal stuff, and maybe some FUD.
Right. This is where things get complicated, where crypto bumps up against the law and government rules. Sometimes.
Yeah.
Uncomfortably.
And yeah, there was one story in the digest that was definitely uncomfortable, actually pretty shocking, linking NYC cops to a crypto torture case.
Yeah, that report from the New York Times. They cited city officials, said 2 NYPD officers were put on modified duty.
Modified duty. Why?
Because of accusations linking them to this townhouse in Soho. Apparently, a crypto trader was allegedly kidnapped, taken there, tortured,
Yeah.
but managed to escape.
That's horrific. What exactly were the officers accused of doing, based on the report?
So the report alleges one detective, Roberto Cordero, who's reportedly on the mayor's security detail, no less picked the victim up from the airport and drove him to the house.
Wow. And the other officer?
Detective Raymond Lowe. The report alleges that both he and Cordero provided security at the townhouse, while the victim, this guy Carturin, was supposedly being held there.
Jeez. Providing security for a kidnapping and torture.
It's a very serious accusation, and like the digest presents it, it's based on the NYT report citing officials. That's why they're on modified duty.
Right, just reporting the accusation from the source. Still, it's a really dark story, showing crime intersecting with crypto and allegedly law enforcement itself.
Yeah, it's a reminder that illegal stuff happens, and it can touch both worlds.
Okay, moving to more official regulatory actions. Thailand's SEC made a move reported in the digest.
They did. They announced they're blocking 5 crypto exchanges from operating in Thailand, starting June 28th.
5. Which ones?
Let's see. Bybit, OKX, 1000X, CoinX, and XT.com.
Okay, some well-known names there. And the reason...
The Thai SEC said it was to protect investors and also crack down on platforms being used for money laundering. They also warned investors on those platforms to sort out their funds before the deadline.
So a government stepping in to block specific offshore exchanges, investor protection, AML, pretty clear regulatory action.
Yep, a direct intervention. And speaking of government action, the U.S. Treasury was busy too, according to the Digest.
What did they do?
They sanctioned a tech firm in the Philippines called All Technology, and also the person allegedly running it.
All Technology, why? What were they accused of?
The Treasury sanctions arm, OFAC, accused Funnel of basically providing the back-end services for thousands of crypto scam websites.
Thousands? Seriously?
Yeah. They linked Funnel to the majority of scam sites reported to the FBI, saying these sites led to over $200 million in losses for victims.
$200 million.
Yeah.
Just enabled by this one firm. How did they allegedly do it?
The Digest says OFAC alleged Funnel bought up tons of IP addresses from cloud providers, then sold access to scammers. The scammers used that infrastructure to set up fake investment sites, clone legitimate ones, and steal people's crypto.
Wow. So the insight is regulators aren't just going after the scammers themselves, but the tech infrastructure enabling the scams, cutting off the tools.
Exactly, trying to dismantle the whole operation.
Okay, slightly different angle here, still related to regulation and investment. The Digest had something from Glassnode about Ethereum ETFs.
Yeah, this was interesting. Glassnode found that most people who invested in those new spot Ether ETFs, the ones from BlackRock and Fidelity, they're actually down quite a bit on their investment. Significant unrealized losses.
Really? How significant? Did Glassnode put a number on it?
Yeah. Their report, cited in the Digest, said the average investor in those two ETFs was looking at an unrealized loss of about, negative 21%.
Ouch. Down 21% on average. Substantially underwater, as the Digest put it. Why is that?
Well, it's about timing, right? The Digest gives the cost basis. For BlackRock's ETF, the average buy-in was around $3,300 per Ether. For Fidelity's, even higher, like $3,500.
And Ether's price when the Digest came out was?
Closer to $2,600.
Ah, okay. So they bought high, basically. Even though it's a regulated ETF, the market dropped after they got in.
Exactly. The insight is, getting access through an ETF doesn't protect you from market timing risk. You can still buy at the wrong time and be down significantly.
Good point. The Digest also pulled out a couple of relevant quotes on this whole regulation topic.
Yeah, there was one from Hester Pierce, the SEC commissioner. She made a really key distinction.
What did she say?
She said, most crypto assets as we see them today are probably not themselves securities. Which is, good coming from the SEC.
Yeah, that sounds positive for crypto.
But she immediately added the catch. She said, that doesn't mean that you can't sell a token that is not itself a security in a transaction that is a securities transaction.
So it's about how it's sold.
Exactly. And she finished by saying, that is where we really need to provide some guidance. So her point is the transaction often matters more than the asset itself, and they still need clearer rules there.
That nuance is crucial.
Yeah.
Okay. And there was another quote from NYC Mayor Eric Adams.
Yeah, more on the integration side. He said something like, we have financial instruments for all other bonds. It is time to have a financial instrument that is made for those who are holders of Bitcoin.
So he's thinking about creating city-level financial products for Bitcoin holders.
Seems like it. Signaling interest in maybe bringing Bitcoin into the fold of traditional city finance shows officials are thinking about it in different ways.
Yeah, definitely. Okay, so we've hit the big players, market drama, regulation, legal issues. What else did the Digest offer? Broader perspectives?
Yeah, a few interesting snippets from magazine stories were included.
Like what?
One touched on a Coinbase hack example, suggesting that if you're in the U.S., your legal protections in a data breach might not be as strong as elsewhere.
That's something to keep in mind. The differences in legal safety nets globally?
For sure. Another snippet mentioned a China state-backed think tank. Apparently, they're considering Bitcoin as a possible reserve asset, versus the U.S. dollar.
Whoa. China. Even a think tank considering that. That's kind of a big deal, isn't it? Shows even places with complex crypto relationships see its potential strategic weight.
It's definitely a data point worth noting. And the third snippet was more practical, basically saying Portugal is still pretty crypto-friendly for digital nomads, despite some recent complaints.
Good news for the laptop lifestyle crowd.
And the Digest had some other quotes too, right? Beyond the regulation ones.
Yeah, some strong takes. Michael Saylor had one about proof of reserves.
Oh, yeah. What was his view?
He basically said the current conventional way to publish proof of reserves is an insecure proof of reserves.
So calling out the standard methods as not good enough.
Pretty much. pushing for more secure ways for exchanges to prove they actually hold the crypto they say they do. Makes sense. Vitalik Buterin had a quote, too, about going cashless.
Yeah, he observed that Nordics are walking back the cashless society initiative because their centralized implementation is too fragile.
Interesting. So even advanced places are finding fully centralized cashless systems have weaknesses. Kind of makes the case for decentralized options, maybe?
That seems to be the implication, yeah.
Yeah.
Real-world example of fragility.
Adam Back, classic Bitcoin perspective from him.
Oh, yeah. He said the trend line is up and to the right, exponential, and so there's extremely bad trading odds attached to selling because you're really hoping that it falls.
Basically, don't bet against Bitcoin long term.
That's the gist. Strong conviction in the upward trend.
Okay. And one more. Willy Woo.
Willy Woo gave a more near-term market read for that specific week. He said, this week's spot buying will strongly influence the next 1-2 months of price action. We are in a pivot zone.
So he saw that week's buying is really key for the near future, like an inflection point.
Exactly. Highlighting the importance of the immediate market flow.
Got it.
Okay.
So that pretty much covers the key stuff from the digest you shared, right? From late May 2025.
I think so. We went through GameStop's big buy, J.D. Vance talking geopolitics, that massive Hyperliquid loss.
The troubling NYC police report, Thailand blocking exchanges, the U.S. sanctioning scam infrastructure, ETFs being underwater.
Plus those broader snippets on data security, China considering BTC reserves, and quotes from Saylor, Buterin, Back. Ooh, yeah, covered a lot of ground.
Hopefully, this deep dive gives you, our listener, a solid grasp of the key events and insights from that week, all pulled straight from the source material you provided. A bit of a shortcut.
Yeah, helps make sense of a busy week in crypto. So maybe a final thought to leave you with based on all this?
Go for it.
Well, think about the contrasts in this one digest, right? You've got huge companies buying in, governments talking strategy, but also massive personal losses, alleged crime involving police, regulators cracking down.
Yeah, it's a real mix.
So what does that mix tell us? About the tensions, the growing pains, the maybe contradictions as these new crypto systems interact with the old established ones. Something to chew on.